Hello and welcome to the home of profitable high probability trading. My name's Tim and I'm one of the financial traders here at the live trade room. Hope you're all keeping well. What we'll be looking to do today is to trade the US Open fully live interactive. So delighted that you can join us. For more information about the vast range of products and services that we do offer traders, those that are genuinely interested in learning this as a skill to become consistently profitable, do just go to our website www.thelivetraderoom.com for more information. Do feel free to contact us through our website if you wish. Okay, so over the next hour or two, what we'll be looking to go through in this session is to go through the process in which we look for high probability trading opportunities. And we do this across some of the world's largest and most liquid markets, from your foreign exchange markets like your euro dollar, your dollar yen pairs, the dollar majors, some of the yen pairs, and also the euro pound as well. In addition to that, we look at the commodities like the oil and the gold markets, and we look at the global indices markets as well, your big major liquid markets like your S&P 500, your Nasdaq, your Dow Jones, the FTSE, the DAX and the Nikkei. So a wide range of markets, and it is important to I suppose understand what's going on multi-asset class. So we don't just focus on foreign exchange. It is important when we trade markets that we do have a comprehensive understanding about the bigger picture. Okay, so with that in mind, let's get straight into today's webinar. Let's start with our risk warning, currently up on screen. So hopefully you can see that. So obviously, you know, trading the financial markets is inherently about your ability to manage risk. So we do have a strong focus on effective risk management. So please do take note, of course, of the risks involved in trading these financial markets. Okay, so let's get up our charts first. In fact, sorry, let me actually bring up FOREX Factory, and we'll just have a quick review of some of the news events, because we do have an important event now today. We've got the president of the ECB, Christine Lagarde, and she's due to speak at the ECB. And you can see here it's quite a useful website to just get some of the information and data points back accordingly. Website to just Okay, good. So we've got Christine Lagarde due to speak at the European Semester Conference about stability, economic coordination and governance in the EU. So there is quite, I suppose, a strong focus on what is next. How do the ECB interpret current market conditions, and what decisions are they likely to make? So there will be an important speech today, and we might see some significant volatility in and around that period. I do apologise. I'm getting a news feed through this earpiece, so I'll be I'll update you and stuff as things unfold. Okay, you can see. Really, there's not much else to be focused on. We had a better than expected German IFO business climate figure. We were forecast 90.5. We saw 92.4, so marginally better in terms of the what this figure is actually a level of composite index based on surveyed manufacturers, builders, wholesalers, services and retailers. So really their outlook is actually marginally better than was anticipated. So of course that's a good thing for industry, it's a good thing for business, certainly in the UK. So that's mildly positive for the German economy. And as you can see, not really a huge amount to deal with. We'll discuss tomorrow's events later on. Patty, great, delighted that you can join us. So look, if we can help, then fantastic. And this is going to be the first of hopefully many that we'll be able to roll out what will be a great help all round, actually, if we do actually come out of this lockdown, which seems a bit counterintuitive, but yeah, it'll be hopefully it'll be the first of many, so we can make money collectively, basically, and really show you these skills from kind of the ground up. Okay, so we know that we have that news event at 2:15. So let's look at these charts, and what we're going to do today, just the fact that it is Monday, we'll just go through the daily time frames just one at a time, so we can get an overview. What we have at the live trade room, we have trade plan webinars every evening at 9 o'clock for about 30 minutes, and what that allows us to do is to be quite relevant with some of the opportunities we're going to be looking the day after. Olufemi, good to have you with us. Hello indeed, hope you're keeping well. So it is important to plan and prepare for some of these trading opportunities, and that's what we're going to do now during this session. We have our live trade rooms and our trade plan webinar every Monday to Thursday. So tonight's trade plan webinar will be useful for tomorrow's trading conditions. So we'll just go through the process in which we look for high probability trades. And of course today is Monday the 22nd. Okay, so let's start then. Let me just move this along. So we'll start with the euro dollar. So we had a bit of dollar strength today, and that seems to be unfolding before our very eyes. And so what is marginally, I suppose, where we're probably better off starting actually is the indice markets. So if we can establish and determine whether these markets are in a risk on or risk off phase, it can guide you quite nicely in terms of looking for some opportunities in other markets. So what I would like to do is to take note of a very important level in these markets. They're your monthly highs and your monthly lows. And what we can see is, if I can zoom in, let me get rid of just a few of these currently up on the screen so we can, whoops. So a lot of these lines up on screen are intraday levels. So they're levels that we look at on an intraday basis. So that clarifies things a little bit. So we can all clearly determine that prices are pushing to the upside, and it was really we've been in this kind of bull territory, especially you could go back as far as 2011 really, with sort of momentary collapses, let's say. That's probably the best phrase to use. Really sharp declines followed by slow grinding continuation trades. So that's the kind of the market condition really that we experience for these equities. But you can see we're at all-time highs. This yellow line just signifies an all-time high currently up on screen. We can see that the price is the 39.69 level. And you can see this obviously in your own charts as well. Now, what we do quite regularly is take note of the previous day monthly highs and lows. So if we took last month's high, which is the 38.71, so it's a high. So we want to take note of this level, and the parameters 38.71. So there is effectively your monthly high for the S&P 500. And the reason why we're interested to see is that the vast majority of those participants that trade these financial markets, they look for long-term returns. So there is a strong focus on these monthly highs and monthly lows. And we want to see if a price continues above that level. And if so, it just stacks the odds in your favors a little bit more to know that you have the weight of this market ultimately behind you. And same to the downside. So we can take note of last month's low, the 36.62, and we'll take note of that level, and you'll see how so that's the 36.62 level, so we can work with that, and we just put a monthly low. So really you can see how last month's monthly low at that 36.62 was a really strong level of support here for your indice markets. So it's meant that we've, so far in the month, we're in a risk-on market condition. So there's appetite to push prices to the upside. Look how prices are interacting with the monthly high, and that's really the reason why I just wanted to do this with you. If we look at it on the smaller term time frame, let's look at it on the hourly time frame. This is what this means. We got a breakout above the 38.71. Markets rallied to the upside. We saw a little bit of a pullback and a bit more consolidation before seeing the next move to the upside. And this represents your all-time highs. Now, since these all-time highs, we've had a bit of a rollover to the downside. But I do want you to take note of at what price this market has bounced back to, because it has the potential to when we trade financial markets, we do look for, we want to get the fundamentals, we want to have an understanding of market fundamentals. So we want to know whether there is wind behind our buy trades, or whether there's real significant reasons to start pushing prices lower. So we are technical traders, but we want to try and get the fundamentals and the sentiment on side. And that's what gives us our edge. So we're not just exclusively looking at the technicals and just pretty much ignoring everything else that's going on, because the reason why that's fundamentally flawed is because the market fundamentals are effectively what drive markets. So we want to understand the commitment of others when we trade, and we see that in price and volume. So if we see prices pushing higher, we generally want to be looking for buying opportunities. That's the situation with these equity markets. They've been in an upward trend for quite some time. We've just experienced a little bit of a pullback, and now this presents an interesting opportunity for us to get in. And the question we ask ourselves is, at what price do we want to get into this market? Well, in that case, we look for opportunities where we can identify levels of support. And the monthly high is a clearly defined level of support. And we were actually talking about this level when prices were back here. Sorry, let me just revert back to our normal sort of intraday levels, just to avoid confusion. So largely we had prices trading between these two ranges. I could probably push this up a little bit higher, but we have had a little bit of an explosive move to the upside, and then we've had the rollover trade to the downside. So for us, when we trade, we want to know market fundamentals. Well, they're actually really quite supportive of these equity markets. They're pulling back currently, but what underpins these markets is central bank monetary policy. There is significant fiscal measures in place. So we now have a situation where Biden is looking to push through a package to the extent of 1.9 trillion, maybe even more. So there's interesting developments in that. And so all of these things are very, very, very supportive of equity markets, which is why they continue to make a series of higher highs. Olufemi, what MA is that we're using? It's a 50 period moving average. Now it's a 50 period on a daily time frame, so they are for us far more important. So we do a lot of intraday. We do a lot of multi-time frame analysis when we trade markets. So we never really want to be exclusively focused on an hourly chart or a 5-minute chart or a 15-minute chart. We use time frames depending on the type of trade we're looking to get into. So and it really, it doesn't matter hugely which market we get into, because if we get into which time frame we use, because if we get into a trade on an hourly time frame, the higher the time frame, generally the better. So you can have a little bit more confidence in the trade if you're trading with higher time frames. If you're looking at levels of support and resistance on a 1 minute chart, for example, and you don't know what's going on in the bigger time frames, it's a precarious position to be in, and actually quite difficult. Yeah, so hopefully that makes sense. It's a 50-period moving average, and unfortunately it switches down depending on which time frame we're looking at, but it's the daily one that we're interested in. As far as moving averages are concerned, you don't really need to overcomplicate the use of moving averages. You can largely work off 50 period, 100 period and 200 period moving average. The main reason being is your longer term investors, their levels that really do matter to that particular cohort, and that represents the vast majority of these markets. So we have a situation with these equity markets where the fundamentals are actually that underpin these markets are really quite bullish. The sentiment is on and off quite bullish, and I think that's probably fair. And the technicals are, without a doubt, are actually quite bullish. So we're left with, I suppose, a fairly easy decision, really, once we do our analysis. That leaves us with an opportunity to buy a market like this, which is the S&P 500. So we've got the monthly highs sitting in here. We've had the explosive move to the upside. Sorry, excuse me, these lines aren't great. And now prices come back to that level of support and resistance. So this is going to take our focus now. This is going to be the interesting level for us to capitalize on our analysis, which is look for opportunities to buy. Now, we want to stack the odds in our favor with this type of analysis, but no one can guarantee prices to move off any particular level. So we might be looking at this level now seriously, and it might deliver us the returns, and it's got quite a nice narrow range in this trade. So the objective would be to identify a level of support, which is the monthly high. Then you want to see a little bit of consolidation creep in, like we're currently seeing, and then you want to see the momentum come in to the upside. And at the moment, we're not quite seeing it, but it doesn't mean that the opportunity is not there to the upside. And we'll be looking at the close of these markets. So you can see that when this market flushed to the downside, we actually initially broke through the monthly high, 38.71, and then subsequently reversed back above it. So we've seen a low of 38.67, and we've reversed back above it. So that's the first indication that suggests. That suggests, right, well, this is a level that the market is now respecting. So let's see if it maintains that respect. The longer it maintains the respect, the more confidence you can have in a buying opportunity. So it's absolutely, we're going to be looking for a buy opportunity in the S&P 500 to the upside above the 38.84. The reason why this is quite good is for all the reasons that I've discussed. The fundamentals, the sentiment, and the technicals are all looking for buying opportunities to kick in. So this has the potential to be quite a sizable winning trade, especially if we do close above the 38.84. We have probably an $18-19 stop loss, so it's quite a narrow little range. And then we can look to the upside. Does it give us the potential upside? The answer is yes. So we're talking about 1-to-1, 2-to-1. We're looking at kind of a positive 3-to-1 risk reward ratio. So again, this fits in with our profiling. This fits in with our analysis and our understanding of trying to capitalize on trades in these markets. So As a result, we will be looking now very shortly the US Open. So the cash markets open at 1 o'clock. So we'll be looking to see if we can get into a bit of a buy trade. The only thing is with us, we don't want to be too prescriptive in terms of when we get into the trade. What the last year or two have kind of shown us is the necessity to actually engage when the opportunities present themselves. So we'll see if that's the case. So the S&P 500 looking for a buy trade, and we're just currently trading around in this session in this sideways moving price action, as you can see. So what does that give us? That gives us, if we're looking to get involved in a risk-on market condition, it's likely to see a little bit of selling creeping in to the dollar trades. So we're potentially going to see this. The dollar potentially weaken as a result. That has been the correlation that we've seen since last March. If the equity markets push higher, we can expect to see the dollar push lower, and vice versa. So we'll see if that plays itself out. So we'll apply some of this understanding, just knowing that we're in this risk-on market condition, although we're currently experiencing a bit of a pullback. So what other opportunities does it give us? Well, if we look at the euro dollar, for example, there's a lot of resistance around these highs, as you can see, and we also have that 50 period moving average within here as well, Olufemi. So that's worth keeping an eye out for, that 50 period moving average. And ultimately the reason for that, let's see what the 50 period moving average is. It's the 2150 level. So so that's often the one that's closest to the current price. So but you can see that prices really do fail to close above that level. So we tried last week to break higher, and we saw a strong rejection, and we've seen rejections of these marginally higher levels as well. So